Yo, what's going on? Training course part 3. Yesterday we learned about the bearish and the bullish candlestick. Today I have a link down in the description. It's going to take you over to a website where you can learn to study candlesticks and familiarize yourself with all these. You'll notice you got the hammer right here, the hanging man, the inverted hammer, all sorts of different material here. What we're going to be doing with these patterns is we're going to be looking for them at areas of support and resistance. We're going to learn how to draw those on our chart today. These are areas of value that we're going to be using to time entries. So let's get into it. So to draw our support line, we're going to go up to our drawing tools. We're going to click horizontal line. We're going to click down here below all the price action. It's going to drop a line in. What we'll do next is slide that up until we get touches. So you'll notice we're touching here, 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 and here. You're also going to want to use a higher time frame because support on higher time frames are more significant than supports on lower time frames. So you'll notice that we have multiple touches going on. The price seems to be respecting this area. It seems like people want to buy there. So if you're going to time an entry, what you would do is you would wait for the price to fall down to this line, and then you would look for an entry trigger, which would be something like a candlestick pattern, for instance, the hammer, or a bullish engulf, or any other series of patterns. And you would simply take an entry point there with a stop loss below your line of support. Now we're going to draw a line of resistance. Similar to the support line, you're going to use your horizontal line tool. This time you're going to click above the price action and you're going to pull it down until you get the most number of touches. You'll notice we're touching here, 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 and here. There was some break of structure where it did come above our line of resistance, but what you need to understand is that support and resistance are areas and not a set price point. So you can just ignore those spots. This is an area where selling pressure is going to come in. What you would look for here is a candlestick pattern, a bearish one, that would push the price back down, and that's how you would know to sell. You've probably seen something like this and heard of swing trading. Swing trading is exactly this. When the price is in a range, bouncing up and down in between a support and resistance area, you buy support, you sell resistance. One more example of drawing support and resistance. Bring your support line up, get as many touches as possible. I like to keep that green for buy. Bring a resistance line down, getting as many touches as possible. And I like to change this to red for sell. So this works well for swing trading. Buy support, sell resistance, use candlestick patterns to time an entry and time an exit. Now that you've learned how to identify and draw in your area of support and resistance, you've taken your first step into swing trading. We use things like candlestick patterns and other indicators to help us understand whether or not the stock price is going to respect that area of support or respect that area of resistance. By dragging that line up, essentially what you're doing is back testing the stock to see where people are buying. That line represents an area where people are agreeing that, hey, the price is good, let's buy here, or hey, it's time to take profits, let's sell here. So that's beginner course part 3, support and resistance. Don't forget to check out these candlesticks, the link's in the description. Get yourself familiar with those candlestick patterns. We're going to do part 4 tomorrow, which will be on moving averages. And don't forget to like, comment, and subscribe. And also keep skating and keep trading. Thanks for watching.